All right, folks, we've got Sarid Harper here from Pipnotic.com. He's going to walk us through his unique take on supply and demand zones, buy zones, sell zones, and also currency strength, his own personal proprietary currency strength indicator. We've just done an hour-long show, which I do recommend. Please go and check it out. This guy's got serious institutional knowledge and background, stuff that most of us will never get a chance to tap into. So go and check that out. There should be a link below the video. Over to you, Sarid. Welcome to the YouTube channel here at Trading Nut.
Yeah, thanks for having me. So what I'm going to show today is, how I'm able to quantify buy essentially trades in a market. So what I like to do is, as I mentioned in the podcast, I talked about a way to show how liquidity is being distributed quickly and heavily in the market. And so I have a piece of software here that does that for me. And it looks a little bit messy for an untrained eye, but for me, it makes a lot of sense. And the reason it makes sense is because everything is color-coded. And so, we're currently on the 4-hour chart, and the color blue means that it's a 4-hour rectangle, and the color red means that it's the daily. And so my software enables me to kind of overlay as many time frames of liquidity distribution patterns on the same chart. And this is relative. So if I go to let's say the 1 hour, then I can see 4-hour areas here and 1-hour areas here. Okay, and so what we're looking at the top is the distribution of liquidity, so patterns that my software is identifying, and then down here we're looking at currency strength. So we have the Japanese yen, we have the Australian dollar, and then we have this histogram. And the histogram is the difference between the two currencies, so the cross currency subtracted from the base currency. And then we have some lines over here, and the histogram is the input into this, which is kind of a mathematical model that analyzes the histogram data, and it tells me where we have area like turning points in the market. Okay, and so if you look at this line here, this yellow line here, it's below the zero line, which tells us that we have the flows that are gradually moving lower. And so that tells us that we may want to consider on this time frame to sell. So this is going to give us a directional bias. This is on the 4-hour, but on the daily it can be different. Okay, it could be positive. And then we have this is my positive variant. I call the positive variant, and here we have the negative variant. And so when the histogram moves up into the positive variant, and that tells me that I want to look to sell. That means that we have reached the end of a cycle. And then I take this information with me to the price chart, and I look for a sell zone. Okay, so assuming that the price moved to the positive variant territory, then I want to be selling, and I'm going to look for price to move to the beginning of a sell zone. And a sell zone, let me disable. I'm just gonna take this off. So we have price chart. A sell zone for me is going to be a price sensitive area at an area in the market where price was distributed in a hurry historically. Okay, so if we look at this, we can see that prices, we came up here and then we shot down very, very quickly. When price leaves an area and moves down this quickly, that tells us that we have an enormous interest in selling at a price point above this area here. Okay, because then you have to ask yourself, I refer to these in my videos as slingshots. Okay, so price came down, the slingshot was pulled back, and then price left. Okay, so this tells us that when price moves above these highs, we're probably going to see it move lower again. Okay, and I want to do this. I want to sell up here when price either pierces this line or gets close to that line. It doesn't have to move through it, but it just has to be approaching it. If price is down here, so let's say if the histogram was this low over here, then I wouldn't be selling here, because that would be the beginning of a buy zone. Rather, that would be the beginning of a bullish cycle. And so I want to make sure that I am aligned with the cycles. Okay, and so what I do is I just mark off these highs and lows. And when you see price turn around like this, so we had price come up to an area and then it left. when it leaves, it's telling us that actually at this price point here, we had an interest in keeping price lower. So we had sellers engage in the market to the short side at this level here. And so this is also telling us that when price comes above this line, well, then the price that was attractive here is even more attractive. And so you want to try and find these areas where there's a very high likelihood that we're going to be offering attractive prices, because the price of a commodity is like the price of a watch or a telephone. I mean, when it's cheap, people buy. When it's expensive, people sell. Okay, and so you can't go about trading any other way. You want to buy at really cheap prices. You want to sell at high prices. And so if we go to, for example, the daily chart and find an example here, I mean, notice that we had a huge sell-off here. This was before, when was this? This is around the corona. This is in February. This is like when everything went pear-shaped for the global economy. And I mean, the release point is here. So that tells us that when we move here and above, that we're probably going to see prices continue lower from there. And the same here to the downside is when price managed to move, when price, this is not interesting, when price was here, when price came back to this area here and left, I mean, price came close to it and then it left again. And so we want to be focusing on price points below here, price points below here. The thing you want to be mindful of is that once price has moved into that area, the beginning of, in this case, the buy zone moves lower. So once price comes up into here, let's say price comes this far up into the box, well, that becomes a new sell zone. That means you're no longer selling at this area here. And so these buy zones and sell zones are changing all the time. So if I just flick on the software quickly, so what we want to, let's go to a big time frame like the weekly. So you can see here that we have this area where the Australian dollar was sold and Japanese yens were bought, which dropped this price, the price of this currency pair, low very, very quickly. And now you can see price is approaching it. And price came to it to the pip, and it left. A little bit deeper, then it left. So this one is probably going to go at least to the highs of the deepest test into this area of, this is supply, and this is the sell zone. And so that's telling us that on a smaller time frame, well, we probably have something in here that is causing people to sell. So then I'm going to go to a smaller time frame. I'm going to look, and then you can see right here. I move this out of the way. You can see that we have another one right here. Okay. Price tested it and then it left. And this box was drawn on the chart when this candle right here closed. So when this candle here closed, this box was drawn. So we were informed that we should prepare for a short, a month and a half ago. Sorry, that's not true, because price was here 35 days ago. So 35 days prior to price coming here, we were told that price would probably have a bounce to that area. And price came up to it, and then it had a bounce. We have this one here, and this one is located at the area, the beginning of this buy zone. So should price come back down to this area here, we're probably going to see prices move away from here. Because last time prices came to this area, they left. Last time prices were at this area, they left very, very quickly. And so if you look at this one, we just focus on this one that's a little bit further down. We have price moving down. We accumulated, so we distributed orders, okay? And so the sell side is buying, the sell side is selling and the buy side is buying. And this buying caused price to move higher. And notice just in here that the edge of the buy zone is here. This is where the slingshot is pulled back. I'm just going to zoom in a little bit more so you can see. Just here, because we had agreement in price, we had liquidity changing hands, and this liquidity changed hands to the point where the buyers outweighed the sellers, and then price moved higher. So if you have a look at this, we'll go on a smaller time frame once again. We'll look at this. I'm going to have to zoom out, otherwise we probably won't see it. I'm going to go to the 4-hour chart, and we'll have a look and see what that looks like. I think it's trying to find these afterwards. Here. Okay, here it is. Right there. So you can see here that we had this price came down, we moved up, The slingshot was pulled back, and then it left. So the beginning of the buy zone is actually here. Okay, the buy zone on the daily chart is the red line. The buy zone on the 4-hour chart is the blue zone. So this is where the slingshot was pulled back, because yeah, we had a really big move from here, but that move didn't, the origin of the move is not from here. It's from here, because prices has to go all the way down to this area before they left. And so I always talk about these as pancakes, where we have a plate of pancakes. Can I draw? Yes. So we have like a plate of pancakes, and so this is the pancake plate here.
Yeah.
Okay. And then we have the pancakes that are on the plate. Should we start from the bottom? There's the bottom pancake. We have another one here, another one, and another one. And so when everyone sit around the table and we're eating pancakes, there's a plate of pancakes in the middle of the table. If I want a pancake, I take my fork and I put my fork into the plate, and my fork touches the first pancake. Okay, but let's say that Cam was in front of me and he took actually the first pancake. So the first pancake is gone. And so what am I going to do with my fork? Well, I'm going to have to put my fork deeper into the stack of pancakes in order to get the second one. The same applies for this. Okay, so these little rectangles are stacks of pancakes or pools of liquidity. And so once price tests the edge of an area, that pancake is gone. And so price or a fork is going to have to go deeper in order to find the next one. So that one's gone. And once price moves to that, this one's going to go. When price moves to that, this one's going to go, and so on and so forth, until there are no more pancakes. And when there are no more pancakes, what happens? Let me turn a note. Stop. Okay, when there are no more pancakes, well, there's no more liquidity at that area, then price has to look lower. Okay, because we have no hungry buyers, so we have to continue to look lower. And we have something just here. How price rallied, the slingshot was pulled back, and then we left. So we do have something just in here. And so this is where we'd look to engage in the market at the next time. Alternatively, we have something here, because the pattern of this candle is telling us that we had a short pause. So I'll do something like that. And that actually looks like where this slingshot was pulled back to before it released. So if we remove this one and these lines here, you can see that actually this period of accumulation was so short, price left so quickly, that the next time price returned to it, we left. Okay, and so I'm doing this. I'm using currency strength to tell me what to trade and when to trade, and I'm using buy and sell zones to show me where to trade and at what prices.
And could you walk us through like a recent trade you would have taken in your entry and exit?
Yes, well, I got into the American dollar, Canadian dollar. I think I left a micro in there. I didn't. So, I think this was a daily trade. So we had reached the end of a bullish cycle. We go to the monthly chart. Here is that. Here is the sell zone. Okay, this sell zone was drawn when this green candle here closed. Okay, and look how much time we had to plan that trade. We had years and years. Price poked into it, then it left. Okay, so the beginning of the sell zone becomes the high of this. Price poked into it, and then it left, and it did that. Sorry, get back. It did that at a price when we reached the end of a bull cycle. Okay, so I said, cool, we're at the end of a daily bullish cycle. That's important. And so I want to sell at that area. And it happened just here. So we got into the trade at this area here. Okay, and so the beginning of the sell zone was the high of this. Price poked up into it. So my entry was the high of the deepest pullback since this area of supply was established. We got poked into it. We had a few hours of drawdown, and then price disappeared very quickly. And the cool thing about that is if you're timing it with stuff like this, so the ends of cycles, this is when you get those really, really big runs. Really big runs. And I'm currently in a trade now. Canadian dollar, Japanese yen, I think. Let's have a look. I think it's still in here. Here it is. Okay, and so we're currently in this trade here, and I moved my stop to break even before the weekend because I don't want to have over the weekend risk. But you can see that we reached we're ending this daily bear cycle, and you can see that. I mean, look what happened last time price poked into these variant negative areas. Price went into it, and then it left. And we're still operating down there, but we're slowly starting to move positive. Okay, and so I thought to myself, super. Well, let's get involved with that. And so we got in on a very small area just around here. Actually, I think we got in at this area here because this is the beginning of the buy zone. So we got in just below that. Price poked through the area, and now we're slowly starting to move higher. Okay, so price is in there. We're kind of, we have no risk in the trade, and I did that as I mentioned because before the weekend I don't want any over risk weekend, not always. And so now we kind of just have to wait and let it happen. But you can see as well here, I mean, we do have an obstacle in the road. We do have a pattern of distribution just above where price currently is. So yes, while I'd like to get out at this price level here, I mean, maybe I'm going to have to get out of the trade at this level here. Okay, and then we have this one just here. Price left, we gapped lower. Okay, the beginning of sell zone is the high here. And so I want to be mindful of this, and I want to consider getting out of the trade once price comes up to this area here, because this is when we're going to see this shift occur because we have attractive prices. I mean, look what happened last time price came up to this area. So next time price comes up to that area, maybe it's going to have a similar reaction.
And what would be your criteria for making a decision that the reaction was strong enough to get out of that trade?
It's looking for price moving in a certain direction over a certain distance within a specific period of time. And so if we had this one here, I mean, price came down, we distributed liquidity for 3 periods. We have 3 white candles, and then price left. We distributed for 2, and then we gapped lower. And so, I mean, that's telling us that we have enormous strength here. And so, I mean, I don't want to be holding the trade now and in anticipation that's going to move through this easily, because it probably won't. It might, but it might not. And I mean, trading is like a game of probabilities. You just have to get as many trades on as are qualified, and you have to let them work out. And so there's a pretty good chance that price is going to have a bit of a tough time moving through this, especially this one here, and certainly this one up here. And then we have this one up here, which is also a very nice departure as well.
Cool. Well, look, brilliant. Thank you very much for sharing this chart with us and walking through how you analyze it. I think the guys are going to get a lot out of this. And do remember, there is that podcast as well you can listen to. Links below the show, below this video. Now, before we wrap up, what's the best way for traders to get hold of you?
Yeah, well, you can visit me on my website, which is pipnotic.com. pipnotic.com, and via my YouTube channel, which is just Sarid Harper, my full name, after youtube.com. And there I'm publishing videos every day, more or less, and so you can find my in-depth analysis of pretty much all of the major currencies, including the Scandinavians, on a pretty regular basis.
Brilliant. Well, look, guys, if you want more videos like this, do remember to subscribe. There's buttons here on the video somewhere. Click on those, subscribe to the videos. There's more like this. Thank you very much once again, Sarid, for coming onto the show. And guys, if you do want to learn more about how this guy started his journey and sees the market, then head over there to tradingalert.com, follow those links, or follow him on YouTube, or visit his site. So, guys, thank you very much for watching, and we'll see you in the next video.